Hi, so today we'll talk about Ujjivan Financial Services and the role that Ujjivan is going to play when it shifts from being just a microfinance institution to being a full-fledged bank. So that's where the growth story lies with Ujjivan currently, and that's why I think Ujjivan is a good buy currently in this point of time. So coming to what is microfinance? So microfinance actually a small term or short term loans given to people to bridge gaps between their financial needs. An example would be a weaver gets an order to make a sari, so but he doesn't have the money to buy raw materials for it, so he would take a microfinance loan for a 20-day period, buy the amount of raw materials, and then return that amount. Though these are short-term loans, they're not interest-free. They come with a high interest, but because they're so small, the interest component doesn't look that so big on these loans. And this is how microfinance works and how microfinance has been working in markets in Africa, Bangladesh, and India with all the companies. Most of these companies are not NGOs and they work for profit, and most three, four of them are listed companies. So if you look at the loans also of these microfinance institutions give, it varies from a small amount to a large amount, depending on a few hundred rupees to actual loans for agricultural uh, tractors and things like that. If you look at the market potential of microfinance companies, they've capitalized on a lot of consumers in rural markets that have access loans to them, and these users are now, as they become financially independent, go through the next stage of loan cycles where they take bigger ticket size loans to generate income, or housing loans, or house improvement loans, and even loans for actually personal loans in the last case. So microfinance in India as an industry. So around the world, Grameen was the pioneer in actual implementation of microfinance. It started to out as a way to block money lenders, and then it grew into uh, a best means of finance for rural sector other than banks, where banks are actually not loans from banks are not so easily available. You require credit history, but these loans that work within self-employed groups are very structured to give financial independence to small entrepreneurs. Also, the key thing to note is repayment of loans in this microfinance is pretty high at 99.5%, which is way better than uh, the loans that are given out by banks and the NPAs or non-performing assets of banks. Uh, Considering loans are mainly given to women, uh, or microfinance was structured such that women groups or self-help groups or individuals access these loans first. That was an important part. It helped grow the economy through double income, and economic growth was driven there. Also, if you take the case of a lot of allied services and businesses that were pushed through microfinance. So if you take a look at Grameen, in Bangladesh, it required people to have sanitation facilities in their homes to take loans. It provided seeds to all people who took loans from them. So it created allied services and industries, the insurance industry reaching consumers in rural places and passing down insurance components or insurance products to these and services to these have been done through microfinance companies that have huge reach through their network in the remotest of places. Also, this concept of microfinance doesn't work only in developing countries. It's there present in the US also. It works in developed countries, and that was proved by Grameen. Uh, Services in terms of even things like hygiene, in terms of sanitation or sanitary pads was introduced, where Procter and Gamble tied up with microfinance companies in Bangladesh and actually cut costs of sales, marketing, and distribution, and use the microfinance network to actually pass its products at a cost that was much lower than it uh, actually passes to retail. So microfinance has a lot of scope and potential to be used as a platform to actually disperse services and products. So if you look at the microfinance industry in India, it started a long time back, but the actual traction has happened only after 2012. SKS with SKS Microfinance with Vikramakula was probably the initial pioneers of this industry, but due to the farmer suicides and everything in Andhra, it caused a lot of issues, and after that, a lot of regulations came. So then post those regulations, microfinance companies have also been given banking status, small finance bank state licenses, and also Ujjivan is one of the few that's got a scheduled bank status also now. If you look at the gross loan portfolio, if you look in terms of years, every year, the amount of loans that are dispersed has gone from 112 billion in INR to 5. So there's a five-fold increase within 5 years from microfinance companies dispersing loans. And also, if you see the ticket size of each loan has gone up from 7,500 right up to 16,000 within 5 years. So it's actually double. The ticket size increased, the and also the amount of loans that mean dispersed has increased. So we look at Ujjivan. It started operations and now has currently it has about 14 crores in sales, and about its profit was about 210 crores last year. Uh, its assets under management has grown like a consistently at 25% CAGR. Also, to have money to disperse loans, Ujjivan needs to generate funds. So it used PE funds, it used banking institutions to generate funds, and has the lowest cost of borrowing, which is at 12.7, which others, Satin and other uh, microfinance companies are at 14.2%. So that's the so its borrowing rate is the least per se. It also caters to about 3.7 million customers, around 470 branches, but mainly the business comes from three states: Karnataka, West Bengal, and Maharashtra. So this is where it looks to actually spread its wings and reach more states and more number of branches in more states. Also, if you look at the current lending portfolio of it, it mainly gives out loans to joint lending groups where cooperatives or women groups take loans as a whole and then share that loan burden between themselves. So Ujjivan is shifting from more from this joint group lending structure to a more individual lending structure because it's come into the banking space also now. Also, it has Bajaj, HDFC, different insurance providers that provide insurance with the microfinance loans through Ujjivan. It also got its small bank facility, small SFB, small finance bank license in 2015, and it's got its scheduled bank status from the RBI in August 2017. One good thing to note, its customer retention also has gone up from 73 to 88 into 2015, and about in their latest quarter results, it was mentioned it's gone up to 89.5%. So a better retention is good for growth because it would get those same customers onto banking platforms and help them get those loans also. As a company, Ujjivan is like listed as a great company to work for. Its CEOs are pretty recognized, and so it's a good company overall. The next thing is why is Ujjivan a key player and why it's succeeding? Because the operational cost is really low because it's dependent on technology as a whole. They have a lot of paperless operations, and all their ground staff and field staff work with tablets and mobiles and PDAs. Also, they have all their SFB, all their small banking, finance bank ATMs that they've set up now are biometric, which is pretty unheard of. Uh, Also, because they have so much biometric and paperless transactions in their system. credit checks and credit reporting for loan processing is really quick. They've also seen that all their bank accounts that have opened have been opened within 5 to 7 minutes, and 98% of their bank accounts that have been opened have opened through this mechanism. If you look at a whole between the main players taking Bharat Finance or SK's Finance, as it was earlier known, out of the picture, the main three mid players in the segment are Saturn, Equitas, and Ujjivan, where Ujjivan stands best placed because it's has the least cost of borrowing it, and also the operational cost is really less. One thing to look at is the risk involved in this with Ujjivan is it it caters mainly to urban poor, and this space, because of so many microfinance companies, is already little saturated. But that's why this SFB or small a finance bank license would enable them to reach more semi-rural customers also. Also, they will incur a lot of cost to set up this when they start operations and create new branches and setups for the banks. They would undergo some operating costs there. The Pradhan Mantri Jan Dhan Yojana that came out actually helped people create bank accounts, but those bank accounts did not actually enable people to access loans that quickly. So that's where microfinance companies can actually bridge that gap. There's been a lot of market potential to be captured actually, because they've just penetrated like about three uh, states for now, which indicate like about 45% of the business. So I think there's much more market potential there. Also, they have received a lot of funds under the Mudra scheme for micro unit development, which is which helps them reduce their borrowing cost and helps them get access to more funds to disperse more money. So the Mudra initiative by the government will actually help these MFIs actually reach bigger scales. Also in this industry, there's a lot of acquisitions and mergers that are happening in stake buys. Big banks like big NBFCs and banks are taking stake in MFs, microfinance companies, because they're trying to like acquire that customer base of these companies. Looking at the future growth, they just about 470 branches. They look to reach about 2,000 branches in the next 5 years, which seems pretty reasonable because Grameen, which is in Bangladesh, has like 2,800 branches, which is a population of so little compared to India. So the potential here is huge. It also is increasing its lending share, which is individual lending share, which was 10% about 40% of its assets under management by FY19. It has the best market cap to asset ratio and profit ratio also between its peers, and its low book ratio. An important thing here to note why Ujjivan has a big growth story here is because the last year from November at the time of demonetization, a lot of unpaid loans, a lot of issues were there due to demonetization, and all that has been now factored into the price, and things have been loans have been written off, or loans have been repaid delayed but same interest levels because of demonetization. So demonetization hit Ujjivan and a lot of microfinance companies that mainly deal with cash loans uh, hugely. They were hugely impacted, but now I think all that is already been factored in since the last few quarters, and now it looks to unfold into its next growth story. If you look at the actual chart, when it listed, it went up really well from June right up till September, October, and then it's sort of plateaued nicely. It had a nice movement till the November period where demonetization hit, and then it took a big slump there, and it's just been consolidating at that level. There's a cup and handle formation now happening here, which would take it in medium term up till 460. But I think this is a good long-term hold if you want to actually see potential of this stock. We initially bought at 300, so my whole price 300, but I think this is a good long-term hold for at least time frame of 5 to 7 years. This is just for educational purposes. I am not a SBI registered analyst, and just consult your advisor before investing in any stocks given here. The money and both risk are yours. Thank you.